In this video, I'll be showing you guys how to analyze the market without knowing much about price action. So I noticed that a lot of people that are coming to the market are finding it difficult coming up with a very good strategy that would help you remain profitable in the market. It's not a crime to analyze with indicators, but in this video I would be teaching you guys all you need to know in order to come up with that strategy you have been looking for in order for you to keep killing the market every single time you find yourself in the market. Before we continue, I want you guys to subscribe to this YouTube channel, click the like button, and also click the notification button so you won't miss out on any of our videos. Actually, we'll be using two indicators for this strategy, and those two indicators are the moving average and the stochastic oscillator. What the moving average does is that it helps you to determine the trend of the market. When I talk about the trend, I mean whether the market is in an uptrend or whether the market is in a downtrend. So without following the trend, you are trading rubbish for me, because they say the trend is your friend. And for you to always take good trades, like high quality trades in the chart every single day, you have to follow the trend. So without much talks, like I said, I would want to just give you guys the settings of these two indicators I just mentioned. So the first one is the moving average. You just go to your settings and then you add the moving average, change the period to 200, the shift should be 0, the method should be exponential, then you apply to close, and then you leave the levels the way it is, leave it to all time frames, and you leave the style as black, change your color to black, and you leave it as 3 pixel or 4 pixel, and then you click on done. And once you're done, you will see the moving average on your chart like this. So if you look closely, you would see that the moving average helps us to determine the trend. In this trend, you can see that price was in an uptrend, and in this trend you can see price was in a downtrend. So this moving average helps you to be able to know what trend you are inside in the chart. Instead of you going to the higher time frame, going to the daily time frame to know the trend, and then you come back and do all those shit and stuffs, all those things are not necessary, because the moving average is doing it for you on a smaller time frame. So whatever time frame you are using, if you're a scalper, you are either using the 15 minutes, the 5 minutes, or the 1 hour. If you are a day trader, you're either using the 30 minutes, the 1 hour, or the 4 hours. If you are a swing trader, you're either using the daily time frame or the weekly time frame or the 4-hour time frame as well. So here we'll be using the 1 hour time frame just for these illustrations, and I have just shown you guys how to identify your trend. And the next thing we have to look at is how to identify the momentum of the market. So we just go back to our indicator button and add the stochastic oscillator. So in the settings here, you would see the stochastic oscillator as 533. So I want you guys to change the K period to 14, the D period to 3, the slowing should be 3, price field should be low and high, the method should be simple, and then the levels should be 50, 80, and 20. And you can choose whatever two colors you want to have on your chart. For me, my main color is blue and my signal color is ash. So this is my main color. You leave it as 3 pixel, and this is my signal color. You leave it as 3 pixel as well. So you go to done, and this is how it will be on your chart. The secret about this strategy is you wait for price to cross either above the moving average or below the moving average. Once market goes above the moving average, that's when you start looking for buys, and once the price goes below the moving average, you start looking for sales. So let me give you an example of a buy there. So yeah, you can see price has been in a downtrend, and what happened next? Market crossed above the moving average, signifying that it was going up. So what do we do next? Since market crossed here, we'll be looking at our stochastic oscillator for a divergence. What is a divergence? A divergence is like whenever price is giving higher highs or higher lows on the chart, the stochastic oscillator is giving you a totally different movement on the oscillator. So if the chart is giving you higher highs and higher lows, the stochastic oscillator should be giving you lower highs and lower lows. If the chart is giving you lower highs and lower lows, the stochastic oscillator is giving you higher highs and higher lows. So the stochastic oscillator does totally different things from what the price on the chart is giving us. So we will now start looking for the two consecutive lows once price crosses above the moving average. So this was the first low and this was the second low. So when we take it down to our stochastic oscillator, when we trace it down, what do we see? When we trace it down to our stochastic oscillator, this is what we are having, and we now use our arrow or a trend line to connect the two lows. Price was going in an uptrend here and price was going in a downtrend here. So price was giving higher highs and higher lows on the chart, the main chart, and on the stochastic oscillator, price was giving lower lows and lower highs, right? So this second touch, the second low, is what we should be focusing on. So when we see this divergence, what we should be looking for now is an entry. And since we saw a pin bar on the chart, let me zoom in so you guys can see what I'm talking about. Since we saw a pin bar on the chart after the cross, so after the cross we were able to see a pin bar around this area. This was the pin bar. So we'll have taken our trade from this pin bar, and then if you took a 3:1, it will have been a very nice trade to take. So let me show you guys another example. This is a sell example right here. We notice that when price crossed below the moving average, we should have waited to see if our stochastic oscillator was going to give us a divergence, and we could spot one divergence here. Here price was making lower highs, and on the main chart here price was making higher highs. So if you trace it down completely, you would see that price was making higher highs here and price was making lower highs on our stochastic oscillator. So we would be looking at our chart for an entry signal, and our entry signal is a candlestick pattern that tells us that this movement to the upside is about to get exhausted. So looking at our chart, we noticed that there was a bullish engulfing here after this green candlestick. Then this red candlestick engulfed it totally, completely, and if we took our trade from here, we would have taken this trade down to this area, and this will have been a very nice trade as well. I can give you guys more examples. So in GBP/CAD, we are looking for a place that price crossed above or below the moving average. So right here we can see that price moved above the moving average after coming from a downtrend. What happened next? We were looking at our stochastic oscillator for a divergence. So while looking at this stochastic oscillator, we are looking for a place that market diverged from what the price on the chart was showing us. And if you look very well at this chart, we didn't have a divergence in this area yet until we got to this area. So what do we see here? On the chart, price was making lower highs, and on the stochastic oscillator, price was making lower lows. So on our stochastic, price was making lower lows, and on our main chart, price was making lower highs. And after this second touch, like I said, we're looking for an entry. And what will be our entry signal? A candlestick confirmation that price is done with that movement. So if we look closely, we were looking for a good confirmation, and we can see that this was our first engulfing candlestick pattern, because it engulfed this red candlestick completely. But if you were not sure about this candlestick pattern, you will have used this candlestick pattern, because this was a very strong bullish engulfing. And if you took this trade after this engulfing pattern here, you will have seen that this was a very good trade you will have taken for yourself. I can show you guys one more example and then we are done for this video. The GBP USD, we're looking for a place that market crossed the moving average to the upside or the downside, and you can see that from this downtrend, market crossed the moving average upwards, and we're looking for a divergence, and we saw a divergence here. So market was making lower highs on the chart, and on this stochastic oscillator, market began to make lower lows. So looking closely at this, after this second touch, like I said, we're looking for a candlestick confirmation that confirms to us that price was going to continue moving to the upside. And if you zoomed in very closely, you will have seen that this was a morning star. But like, it's very important for you to know the what the candlestick does rather than cramming the name, because a lot of you cram the names but you don't know what it does. Looking at this chart here, you would have seen that price made a form of a candlestick confirmation here that this move to the downside was already completed. And after this star confirmation here, we could see that market kept playing to the upside, and this was a trade that will have given you a good risk to reward. So that is all for this YouTube video. Once again, I want you guys to subscribe to this YouTube channel. Don't forget to subscribe to this YouTube channel. Click the like button, and also don't forget to click the notification button so you won't miss out on any of my new videos I will be dropping on this channel. If you have any questions about this strategy, or you want to join my free community on Telegram, the link will be in the description below. So all you have to do is click on the link. See you guys next time.